Hey everybody, hey traders, Chris Pulver here. My handle is Chris Pulver. My YouTube channel is Chris Pulver Trading, so it's youtube.com/Chris Pulver Trading. And I had a couple of ideas. I've done a lot of live sessions the last couple of weeks. This week and last week have been pretty interesting to say the least. And so I wanted to take a step back and just keep the analysis very, very simple. My typical kind of top-down analysis, my live sessions, I call it the Pulver Report. So I take a look at the S&P, take a look at the Nasdaq, along with futures, look at the Dow Jones, look at the Russell, look at the volatility index, which hasn't been doing much this year except for the last couple of days. We've gone from roughly 11 to 16.5, up around 10, 11%. The dollar index or the Dixie, oil, gold, silver, Bitcoin, and some related Bitcoin and Ethereum ETFs, copper, and then foreign markets with the Nikkei 225, the German DAX, the FTSE for the UK, China, and then the Mag 7. So right now, this is the ES or the E-mini futures feed. And I did this because the chart's pretty clean. I've got some of my trade ideas there that I just help me keep track of when I'm trading and using my TradingView charts every day. But a couple of things I want to look at. So we have a couple of levels to start from. And given this correction we saw back in 2022, I'm looking at this area as a potential bottom that started a new trend. So we had a big push from COVID 2020, 2021. We had a big correction in 2022 where nothing was really safe. We started a new trend here, in my opinion, in late, Q4 of 2022. And into 2023, we had a couple of broad market pushes. And in 2024, it's been mostly broad market. And really, not a lot has gone wrong. Other than a dormant small cap, which just came alive the last couple of weeks, we've had the S&P up, we've had the Qs up, but it's been a narrow and highly concentrated rally, as everyone has probably seen and felt. So what's interesting about this last week is this highly concentrated market decided to maybe put a dent in the Mag 7, maybe start to rotate out of the Mag 7. And it looked like the Russell and the small cap growth was going to be the best place to park your money for maybe a couple of months. But instead, it was like a couple of days. So anyway, let's keep the analysis really simple. Here's what I'm thinking is going on right now. We have a low to high and then a pullback, a higher low to higher high, and then a pullback, and then another higher low to higher high. Now, the whole time I have been watching this, I have some indicators that give me some pretty good ideas of overbought, oversold conditions, and in this case, we're overbought. I also have some indicators that not just show me overbought, but also show me some divergence. We're divergent. We have been getting a little frothy, a little top heavy. Earnings has high expectations for this Q2 print. So as we get into earnings season, I do think that a lot of companies from the broader market will have to deliver something relatively positive for this market to find another reason to rally. So we are sitting here with what I think is a nice clean 5-wave move, wave 1, 2, 3, 4, 5, and likely the expected move from here is going to be something down for a 3-wave correction. Now, I'm not an Elliott wave person. I'm not a wave theory person, but it does make sense when it's very, very clean to me. So if this is correct, and again, this is somewhat subjective, but I do think this is a clean enough analysis that if we start to topple over, it would make sense to me to have a 1, 2, 3-wave correction. Now, that three-wave correction to me is coming back somewhere in this 7 to 12% pullback zone. Now, historically speaking, a healthy bull market, we typically see 3, 5, 7, even up to 10% corrections, and the market can still buy the dip and rally to all-time highs. In this case, a 7 to 12% correction, if it's volatile enough, we are going to have to see how aggressive those bulls get at that 7 to 10% zone. If we see some very big bullish pushes, if we see some high volume at those levels to the upside, let's say we see some morning stars, let's say we see some piercing lines, let's say we see some some bottoms, great. But if it doesn't show up, my concern is that this might be getting a little toppy. So could this be a pattern that sets up, let me use a different color here. If this sets up a pattern where if we have a 3-wave move and it tests this low, if we do not respond with a favorable bullish run to resume this trend, my concern is that we could still see a push to the upside, and that ends up setting up the bull trap to then come down and do some more damage to the downside. And that would essentially erode a lot of the profits for 2024. Now, I also think we could have a reason to justify a larger market, broad market rally, getting ourselves up to new highs. If the S&P is able to hit 6,000, that's a pretty awesome milestone. Also, as a percentage standpoint, that'd be a pretty good year-to-date move. And from there, I could see this high and this high getting a little bit more toppy as things kind of slow down. Now, again, the last thing you want to do here is call a top. I'm certainly not calling a top, but the evidence is starting to show that the market is tipping over a little bit. Now, let's take a look at this chart here. I look kind of day to day on a 5-minute time frame, looking to see if I have some opening above breakouts. You can see here that the SPX was down for the week, and most of it was Wednesday, Thursday, Friday. So we had a big gap lower Wednesday with lots of pressure, and we did in fact go down. I want to say close to 3%. So from high to low, we're sitting around 3.02%, pretty much right in the number there, and a down week for the S&P. SPY, same thing. We took out last week's low. This was an interesting probability. We typically do not take out both high and low of the week, but we poked the highs, and that did make like 1, 2, 3, 4, 5, 6. We made 6 all-time highs in a row, and it did feel a little toppy, and it certainly got a little toppy as Wednesday, Thursday, Friday ended up being a big drumming to the downside. So S&P down, NASDAQ down heavy with a slight red from last week as well, because we had the big sell-off on that rotation day on Thursday. That was the July 11th move. And then we followed through this week. So for the Qs, we had a high, low, lower low with some extra volatility to the downside. And we're seeing about 5 to 6% sell-off from top to bottom right now. So about 5.8%. Correction levels I'm looking for the S&P to correct somewhere between 7 to 12%. I'm looking for the NASDAQ to correct somewhere between 10 and 15%. I'm interested in those levels for some buying opportunities. I'm looking to see if the market can shrug it off, take it in stride, have a high volatility correction, have a needed correction, because we've been very toppy and very over the skis the last couple of months. But here we are starting to kind of roll over. Now, if earnings can kind of save us, the Fed cutting rates can save us, we get rid of some of the election drama perhaps. It seems like the market has enough clarity to go on. However, Trump doesn't necessarily make it easy when the first thing we talk about is thinking, okay, I think the guy's going to be president, and all of a sudden we're talking about U.S. and China relations and trade wars. Well, that kind of shocked the market this week, and so the global economy took a step back. The fear of global slowdown is in full effect, so we will see what the deal is for right here. So here's back to the chart. Qs, Dow, just by a whisker, hanging on to a very small gain for the week, barely, but you can see that it gave it all back essentially, and it's down around almost 3%, 2.8% on the Dow. And the Russell, what had one of the best weeks that we've seen since, like, I don't even know when, maybe in the last like 10 or 20 years. This has been a crazy run, but from low to high, this thing ripped up about 13%, and then quickly in the last 3 trading days gave about 5% of it back. So will the small caps continue to get some bid? I hope so, because I'm long the Russell, so we'll find out. The volatility index also had a big jump to the upside. I think this is a bit of a price discrepancy, but we've been steadily going up from about $12 to $16 and change. I'm still looking at this on the other chart here, higher time frames, looking to see if the VIX will continue to push higher. I have some chart alarms set at these intermediate levels at 20 to 21. I'm also long the VIX for some hedges as well. Long call at 1050 and an out of the money call at 20. If these last me into September, I'm trying to get these paid as soon as possible. And I'll likely have a good chunk of profit there if we see additional volatility and anything else to the downside. So volatility is up. We'll see if it stays. This seems like a kind of an odd spot to be, going up and then pulling right back. So if we do push up into these, high teens or 20s, I'm probably going to take some hedge positions off on the VIX. I also have some hedge positions on ES as well as NQ, and I'll see how those play out over the coming weeks. I really am pretty much hedged through the end of September, and I'll look to see what Q4 does. That gets us through the July 31st FOMC as well as the September 19th, September 18th rate decision for the Fed. So a lot of things going on here in the markets, but like I said, I want to take a step back, keep it very, very simple. And for me, I think that we're just entering in on a likely technical correction. The market is rolling over. Now, the proof to me is technical. If we come back and take out this low here, I can see this as a high, low, lower high, lower low. Now, that might feel awful. There might be a lot of nasty headlines going on. There might be all sorts of fears getting stoked into the markets. But to me, technically, I feel like this is a spot that the market can then bounce and resume, and we'll see if this is going to come back up and retest all-time highs as a broader market rally. And that, like I said, if we come up to all-time highs again, then I'm getting a little bit more toppy going into 2025, but that is not happening right now. So first things first, I'm looking to trade, kind of week to week or every couple of week volatility. Let's see if the market just continues to dump to the downside. If it does, great. So I'm looking for a 1, 2, 3 wave move, and to me, the floor on the S&P. Let's go to the SPX here. This floor is just around 54.40. So if we take out that low, that would be a structure break that then has a lower high, lower low. If that's the case, fine, I'll be ready for it. I'll be hedged for it. If it just happens to come down and tap these levels and then rip to the upside after a brief correction, then it's going to look a lot like April and the market's up and running to new highs. So it could be shallow, but to me, it would make sense that if we're prepared for some downside, having a 1, 2, 3 wave correction makes some sense. And then we look for some stability and evidence that the bulls are going to step back in, and we'll see what they do with it. So that's it for me. If you'd like to follow me out there more, you know how to find me. You can find me on YouTube, youtube.com/Chris Pulver. You can find me here with my profile on TradeView, Chris Pulver. Happy trading lots of profits, and I'll see you all soon. Thanks, bye.